Welcome to Introduction to Investments. My name is Badrinath. I have been teaching investments in various forums and various levels for the last couple of decades. As an investments professional, I wear different hats. Sometimes I'm an academic writing research papers that very few people read. Sometimes I write articles for the popular press. Sometimes I'm a consultant. Sometimes I'm a teacher. Sometimes I'm an investor. Occasionally, but not that much anymore, I have been a trader as well. But through this journey of mine in the investments world, I want to share with you some of the things that I have learned, some of the lessons that I have learned, the things that I need to educate other people about. So most of you have had some exposure to investments, I would guess. Some of you might have dabbled in real estate, some of you might have played commodities, gold, some of you may even have entered the stock market. In all of these decisions that you made, you probably thought about things like, how long should I hold this investment having made it? How much is it worth? Did I pay a right price for it? What kind of risk am I going to take? Taking real estate as an example, since it has been in the last decade or so, a scenario where lots of people have made money and lots of people have lost money, you might say, why should I even think about the stock market? Let me just buy property like real estate and houses and own them and watch them appreciate in value. Some people have even traded houses like other people trade stocks. Flip back in time a few hundred years, and there is this thing called the tulip bubble, where people were actually getting rid of their real estate and buying tulips because the prices of tulips in Holland appreciated 300% in the course of a few months. What I guess I'm trying to say with stories like that is that sometimes investments, as we call them, tend to have a bubble-like or a mania-like quality. But that is not what our entire story here is today, even though many of you may have been informed by things like that from perusing the popular media. So with that said, let's think in terms of what types of assets are we talking about. So the first distinction that we make is between real assets and financial assets. When you talk about real assets, you're thinking about things like assets which create value, things like land, buildings, equipment, art, antiques. Some of you may have ownership in those assets, whether you thought of them for investment purposes or otherwise. The value of these assets tends to fluctuate in terms of depending on demand and supply, as opposed to real assets, which many of you may have more than passing familiarity with. My focus here today is, and in this course, is financial assets, which are really legal claims on benefits created by those underlying real assets we were talking about. Things like stocks, things like bonds, things like derivatives. These assets derive value from a future claim on benefits, financial benefits that are created down the road, uncertainly, by some real asset. Bonds, likewise, are pieces of paper that are used by governments and corporations to raise money, and in return for lending money to these entities, the holder of that bond or that piece of paper is entitled to a periodic payment or a discount at the time of issue, or sometimes both.